Welcome back to The Hurdle Rate, episode 30. I'm Tim Kotzman. I'm here with Jeff Walton, Ben Workman, and Matt Cole. And we're cooking. We're already cooking, even though this is just the intro of the podcast. We have Bitcoin, gold, probably several other things at all-time highs. Open question, what does the addition and the announcement with Ben Workman today do to the podcasters per share? Is that a different metric when he was a board member versus a board observer and now an active member of the team? So whoever wants to take that one.
Yeah, I think he only counted as like a quarter of a podcaster per share as a board member. Now we get the full benefit of the full podcaster per share for bringing Ben on board, and so it was about time. The podcaster per share kind of languished for a little bit at Strive, and we needed to raise it up. But in all seriousness, I mean, I couldn't be more excited to have Ben on board. Although a Bitcoin Treasury company is a pretty small team, you need a really core, strong group of individuals to really execute at the highest levels. And that touches several different dimensions, from your corporate structure, how you think about building your corporate structure, what type of long-term to permanent liability you're taking on the debt side, on the digital capital side, on the equity side, how you're thinking about building your equity stack, the investor base, the investor conversations, investor relations, both with institutional investors, with retail investors, all those different dimensions. It's a lot of work. I think, as Jeff knows, kind of coming under the hood, I mean, there's not a lot of sleep that happens at Strive. And I think that one of maybe even the maybe misnomers is that you can do this well with like two people. And I don't care what two people you have. If you really want to do it at the highest levels, you need a team. And so that's obviously what we're building, what we have with our executive team, our board, and just going to be more excited to bring Ben on as our new chief investment officer. And I am more than happy to take that off of my titles.
Yeah, no, it's been awesome to join the team. And, obviously I've been a part of the team now for quite some time. So I've got the opportunity over the last several months to watch the way that this team thinks about things, looks at the future, looks at Bitcoin, and then to see how the entire team operates together. And to be honest, that was one of the things that really impressed me over here. To Matt's point, Strive itself is not an overly large company from a headcount perspective. But the amount of productivity and the amount of thought that goes into every action from this team and the speed at which they're able to move has been incredibly impressive. And one of the things that I really liked when I talked to Jeff and when I talked to Matt was I've been of the mindset that because these treasury companies are moving so quickly, you need to have enough people in places that can continue to operate where you can effectively put everybody in a position where you can be 70% operations, 30% think tank, right? You need to be able to sit back and look at the landscape and digest all the transactions that are happening and digest the broader macro markets and very thoughtfully chart out your path and structure the types of products that you want to put out that are going to go after specific markets. And I think that's something that's quickly lost if you do this with too small of a team. There's a lot that comes with running these. It's not, I think a lot of people think that these go on autopilot the minute you're done with one capital raise. And the reality is it couldn't be further from the truth because you're very quickly on to the next thing, right? Look at what happened with Strive. They closed a merger, and what did they do within days? Well, they went and started doing an acquisition, right? And now you look at other products and you keep it moving forward. And so there's constantly work to be done. And because this is such a new space, there's also work to be done on educating TradFi on what this means and bringing those investors under the hood and helping them understand what these types of companies can bring to the market with digital credit products and any of the other instruments or securities that are being issued by these treasury companies. So it's a really heavy lift. And I think we're at this period in time now where this is going to speed up exponentially. I don't think it's going to slow down. You're watching Bitcoin on the move right now. Matt made a post today that showed that our announcement made it to the top headline on a pension website, which is the first time that that's ever happened, which means pensions are now monitoring this space and looking at the news that's happening in this space. And that's a huge development. And so people are starting to wake up. They're starting to see the power of Bitcoin, and now they're starting to look to the equities and the credits markets to see where Bitcoin is going to show up, where they can participate. And that's going to be a massive movement. And so as a team, we need to be very thoughtful about the way that we pursue that. And now having the executive management team and all the support structure underneath us at Strive, we're in such a great position to be able to capitalize on this. And what a lot of people don't see is the people that are behind the scenes at Strive. You don't realize how much goes into, the finance operations of these, the legal that's involved in these. I mean, these guys have been burning it at both ends for months now, and they never stop. And that's something you want in the team. You need that full support structure, top to bottom, where everybody plugs into their role and they just execute. And that's what's been so impressive with Strive, is everybody knows their role, slots into it, and just pushes forward.
100%. I'm excited to have you on board, Ben. This is going to be a lot of fun. And the concept that you brought up there is there's a few things you've got to be thinking and working and communicating, and having people that can do all three of those allows a team to be flexible and dynamic, to go to different conferences and events, be in the news, be working behind the scenes, and making good decisions. And I think what all this is really comes down to is being able to make really good decisions at the right time, without emotion and with analytics and thoughtfulness. And that's something I think is incredibly important. And I recognized it this morning. I woke up, Bitcoin's at all-time high, and I took a deep breath, let it out. I'm like, okay, here we go, back to work, right? And we're just on the grind. And I kind of felt, and I was watching Vladimir Guerrero Jr.'s Homer yesterday, and I watched it probably 25 times because it was just incredible. But my favorite part about the home run is it was bases loaded in the playoffs, crowd's going crazy. He steps out of the box, he takes a deep breath, gathers himself, and he's able to go out and hit an absolute dinger. And that's what we're able to do. We have the ability to think, take a deep breath, and react with thoughtfulness. And I'm excited to have more people to help, share the load, so we can make sure that we're in the right place at the right time.
And maybe just a point on that, back when I was at CalPERS and we had this record of 11 years of outperforming our benchmark every single year, we actually had an instituted policy that unless it was an emergency, we had no meetings from 6 a.m. when we started our day, because it was on the West Coast. We're working East Coast hours, 6 a.m. to 11 a.m. The first 5 hours of the day, it was watch the markets like a hawk and understand everything that's going on and think. Because you're managing a multi-billion dollar portfolio, you're making active decisions, and we want you to make the best decisions and then execute them with excellence. And so that gets into this mindset of like actually putting your executive team in places where, yes, you're going out there, you're communicating with people, you're implementing processes, but you're actually also thinking. And this kind of gets even into the hurdle rate. The hurdle rate's probably still mostly going to cover strategy. And it's not because we don't have anything going on. It's because they're the biggest player in the space and they're innovating at the largest scale and at the fastest speed of anyone. And we are watching every single company, most closely strategy, what they're doing, what they're building out, and then taking that information in to build at Strive. And so why not communicate that out to the market, help the market as it's digesting these things with the mindset of a hurdle rate, with a zoom out mentality. I mean, I was sitting here watching Bitcoin hit an all-time high this weekend, and it was like, hey, it was literally just last week that we were telling people to zoom out because the fear in the market was insane. And 1 week later, we're at all-time high. 1 week. And I think that mindset of, when Bitcoin was even substantially lower than, earlier this year when we were doing the hurdle rate and when tariffs were going on and we were telling people to zoom out and kind of laying out the picture for the year, that is an institutional mindset. And I think that is why you saw someone like Pensions and Investments, which is the biggest media company for pensions in the United States. It's by far the biggest one. When I was at CalPERS, it's the one that you watch every single day to seeing what's going on in the space. And the fact that they put the announcement of Ben's hire as CIO is like literally the top article this morning, shows that not only are they watching, I mean, every large pension in the United States saw that, but that it's also that Bitcoin as an asset class is starting to get institutionalized. And that will require people that aren't jumping up and down every time Bitcoin hits an all-time high and running and hiding, thinking the world's going to fall when it drops 10, 15% or 20% or 30% or 40%, really. It doesn't matter, that are able to actually think in terms of years and decades, which is what we've continually done and what we're going to continually do, right? And I think it's so critical in this space because even institutions are going to struggle with the volatility of Bitcoin. And I think that's something that we talk about mostly from the perspective of the retail audience, the Twitter audience, the things that we're seeing. But institutions, they invest in public markets like fixed income and public equities, and then they invest in hedge funds and they invest in private equity. And a lot of those vehicles only get marks once a quarter. And so they might have a volatility profile if they were liquid like Bitcoin. Who knows? But they don't. And so when people see their marks up and down every day, and then you think about amplified Bitcoin or digital credit, all these vehicles are going to have more volatility than what people are used to. And so they need to be able to understand the zoom out mindset. Now, the good news of that is that the duration of their liabilities are extremely long. And so they should be able to handle long duration assets. And I think that is where this conversation that each of us from our different perspectives brings, from Jeff from his insurance background, which is probably even a longer duration mindset than even pensions, and Ben's background can bring that holistic picture to the institutions, and I think in a really compelling way. And I was surprised, but in a sense, to see the pensions and investments already seemingly watching this and watching our team.
Yeah, it just shows the shift that's happening out there. And I think what's really fascinating about this particular period in time is that because everyone's effectively at the same starting point, from an investor perspective, whether you're an institutional investor or a retail investor, you're still trying to learn what is the value proposition that these organizations are bringing to the market and how are they differentiating amongst themselves. And so the eyeballs that are on every move that these companies make are wide ranging. And there's not a lot of great sources to get the information and to help get the basics, the foundational basics of what this strategy means and what you're trying to achieve as an organization. There's not one place you can go and get a cheat sheet that brings you up to speed right away. This is one of those that's constantly evolving. And we're seeing that with all the different types of transactions that are happening, the different types of investors that are participating in each of those transactions. The market's constantly digesting the new names that are showing up on these investor sheets when, a pipe gets done or when an IPO happens and the 13Fs start coming out. People are really watching to see who's dipping their toe into this space. And I think that's what's so important about, what we're doing here with the hurdle rate and trying to help bring people up that learning curve. Also with True North, we've been doing that for quite a while now. But I think that's going to become more and more necessary because while we are in a position where we see the market maturing and people starting to get an understanding of the mechanics of all of these transactions and the long-term value proposition, what's happening because this message is getting amplified out there in the market is you're constantly cycling in new investors now. And so you're having to go back to the basics often and not forget that with every episode or with every interview you're giving out there in the mainstream media, that you've likely got a very large cohort that's still trying to figure out exactly what it means for digital credit to be on the scene. What is amplified Bitcoin? What is the intended outcome of these public equities over a decade-long time period? And that's what's going to be so fun about this, is we get to build and shape that narrative and that educational base out there for the investors, which is going to work for both retail investors as well as institutional investors, and the different products you bring to the market give you different opportunities to engage with all the different cohorts that are out there for us. So the next, with Bitcoin getting the attention it's getting today, I think that the next 3 to 6 months are going to be where we really see the growth curve happen here. And you're going to see more companies coming online. You're going to see more products and more securities hitting the market. And you're going to see more institutional demand for these types of products. And I think that that's when people are really going to have their aha moment. They're going to finally understand just how transformational Bitcoin is. Because like Saylor said, if people want to fix the money, you've also got to fix the equities, you got to fix the credit, you got to fix the technology, you got to fix everything. And so now we get to plug in and be a part of directly fixing a couple of those categories, which is going to be a lot of fun.
Yeah, we're so freaking early. we are so early. It's like everybody on the screen has spent 10,000 hours plus in Bitcoin, yet some people literally just see Bitcoin, see the number go up, and they haven't even dipped their toe in the water figuring out what it is. But this excitement, this continuous all-time high excitement will continue to bring more eyeballs in here. Like, what's going on? What's happening in this space? What is digital credit? And that just takes so much time. And people are so impatient right now too, which is they're really quick to say these Bitcoin Treasury companies are dead. They're failing. That's like saying that the second insurance company or the third or fourth insurance company in 1696, when they're insuring boats going across the Atlantic, like there's only going to be 3 of these things ever. It's like, what are you talking about? There's like the landscape is so huge. It is so vast. There's so much opportunity that we just don't, a lot of it's inconceivable right now. Like we don't even know what it looks like, but it will make itself known in the next 5 to 7, 10, 15 years. But that process will be hyper accelerated, right? Thinking about things that are insured today, they were completely inconceivable in the 1600s. And that's the evolution of this marketplace. It's very, very similar. There will be different products that we don't know exist today, but they will exist in the future. And that's reshaping this entire financial world. So yeah, I think we're incredibly early. It's just so fun to be working in this space. And I think that there's a lot of antagonism from like these Bitcoin OGs when there could be excitement and support, because this is ultimately good for the entire Bitcoin ecosystem. You've got this shift from these like crypto bros into institutions that are holding this capital and supporting the network permanently for the future. So yeah, it's an exciting place to be. And I think there's tons of room and opportunity out here for many companies to even just store your value. Like if you're concerned about just storing your value, like the money that you make and you want to store it appropriately, Bitcoin is a great option if you're thinking for the long term.
Yeah, I think tribalism is always going to be out there. And you see that segmentation even within Bitcoin. So you've got the Bitcoin purists that no matter what you do, they're going to hate that corporations are involved, period. Right? Because they viewed Bitcoin as needing to remain pure and it just needed to be people that are involved. Whereas my perspective on Bitcoin was when you get a gift like Bitcoin that's released to the world, right? Satoshi walks away and leaves the project open to the world. You no longer get to control how the world best utilizes that product, right? It's going to find its highest and best use throughout time. And storing value is a massive use. And I don't think even at the time when Bitcoin was released, obviously there was foresight there where they saw what was happening with the fiat currencies, but I don't think that even Satoshi would have probably seen how quickly it started happening. It accelerated at a massive pace when the COVID era hit. And so now it's not just individuals that are needing to protect themselves. And you also have to realize that corporations are made up of exactly that, individuals, right? So the adoption's always starting at the individual level. That's where that conviction first has to be built, and then it works its way onto the corporate balance sheets where they're trying to protect those investments and the value they're creating as a corporation as well. And that is just a massive benefit to the world. And you're starting to see that pick up. But even within the Treasury space, people like a team. I liken it to, watching the NFL. Everyone's got their team. They get really passionate about their team. They're going to tell you why their team's great and your team sucks, right? I mean, you see plenty of that out there. And that's just human nature, and it's fine. And quite frankly, it makes it fun a lot of times. But I think the part that you have a quick learning curve on is what you saw recently with pretty much across the board with all the Treasury companies was you were seeing massive capital rotation into stocks with incredibly low float, right? Most of these stocks, even when they were raising capital, the full shares weren't out there trading in the market. There's very small amounts of shares, which means very little capital can come in and have an outsized impact on these equities. And so there was this period of intense exuberance right away, and it all hit at once, and you could see it hit across the board. You could pick a name and go pull up the chart, and they all look the same. And I think what people are going to realize is that we're now reaching a point where this entire sector is kind of renormalizing and resetting values, right? You get that extreme exuberance, it deflates out of there. You had Bitcoin drawn down. People were also, losing their conviction in Bitcoin. And they thought that we might have already topped out for the cycle. And so people were rotating capital away from any of the investments in that space. But now I think you're going to see this at a point where, the exuberance has been pulled out of the market. And now is the time for these companies to continue pushing that message towards the future and continuing to build. What the critics want is they want you to roll over and give up, right? That's what they want. They want you to come down and say that their thought process is right. But you don't step into these roles to roll over and give up just because people start telling you mean things on the internet. It's not how this works. It's quite the opposite. You put your head down, you focus, you build with a time period of 5, 10, 20 years. And when you're doing that, the noise doesn't matter anymore, right? There's going to be periods of fluctuation. You're going to go through market cycles. You're going to have black swan events out there that impact markets broadly that you can't control. But when you're on one of these teams, that's not the time where you throw out your entire strategy and your entire thesis. Half the time, those are opportunities where you can actually accelerate things, and everyone was writing, MicroStrategy's obituaries in the early days and talking about how he bet everything and he lost. I don't think he was having a great time, but what you never saw him do was quit, right? He never quit. He had conviction. He knew where this was going. He was focused on a long-term transformational plan that was a really big idea, and he pressed on and he pushed forward, and now he's winning. And that's what it takes to succeed in this area. So for the people that, come out of the woodworks and, they want to chirp you and tell you it's over and you've lost, like, buckle up, because this is a long ride, and these are not teams that quit quickly.
And they had the money. It's like, well, when you have the money, there's incentive alignment here with all of these companies. I think that's one of the more unique things. It's a little bit different than traditional financial equities, right? Like, we all want Bitcoin to do well. That's a little bit different than the fiat treasury companies that are, squandering value.
Well, this value gets retained. And I think that's one really important distinction that people overlook between traditional companies is, all right, you've got earnings from a traditional company, but those earnings have to quickly be recycled back out the door, right? It's constant reinvestment. You're constantly having to roll it forward, and you've got to speed up, or you've got to boost your sales cycle. You've got to produce new products. You've got to put it into R&D. You have to put it into all these things and hope that those investments pay off continuously into the future. Whereas here, where we're effectively riding the debasement trade, which is one of the most certain outcomes that you can possibly think of at the moment, every asset that we purchase with the capital raised through this strategy goes onto the balance sheet and has the ability to continuously perform into the future. If you don't think that money printing is going to stop and that debasement is going to stop, then it's a pretty good risk-adjusted return opportunity, to hold Bitcoin and ride that cycle into perpetuity, because they can't stop. That's how the entire economy is designed. And if you're going to continuously be trying to spur growth and grow your way out of debt problems, it means you're going to have to continuously provide easy access to money. You're going to have to inject more money out there into the economy to keep things moving. And that's going to put these companies that are building these war chests, these incredibly strong balance sheets on a fixed supply asset like Bitcoin, in a position to be able to capitalize on this for decades and decades to come. So it's foresight. This is what happens when you come up with a really bold idea and you see it being implemented and you double and triple down on this idea and the revolutionary aspects of this asset, and you make it the core of your corporate strategy moving forward. And I think people are going to be very surprised looking back, 10 years from now, looking back at the time that we're in today and going, I didn't realize how big this was going to be, because I think it's going to be absolutely massive.
As you have certain people writing obituaries for Bitcoin Treasury companies, literally, I think for the first time ever, Wall Street banks published research about the debasement trade. That's how early we are. Like this last week, they just published that. That is the new idea on Wall Street, and you think about how much capital is at play there. And why we're talking about building all these things out, building out amplified Bitcoin through common equity, building out digital credit through fixed income preferred equity securities, Bitcoin itself as just an amazing fundamental base asset, that debasement as a long-term thesis is just starting to be discussed on Wall Street into pensions. I mean, you think we're at the end of this. I mean, that tells you how early this is. This trade has, forever to go, but the digital gold rush era, I still think has 10 to 15 years to go. And you think about, and I think one of the things that I've never got a good answer from the Bitcoin OGs that think Bitcoin treasury companies just aren't going to work because, they looked at, a low float and a pop and it goes back down, is tell me how it doesn't work if your cost of capital that you're borrowing at is less than the future return of Bitcoin. If you are a Bitcoin bull, the structural position that Bitcoin treasury companies are putting themselves in, and I think preferred equity is the best way to do it because of the longest duration of that asset. Tell me how that doesn't work if you think Bitcoin goes up 30% a year. It just works. And I think that is, it's just math.
It's just math.
The only way it doesn't work is if you think that Bitcoin's not going to go up that much. And if that's your point of view, then, maybe you're a Bitcoin OG, but you must think that Bitcoin is over. And I think that's not their view, but yet they don't seem to understand a digital carry trade that has been put in place for different purposes for institutions for decades. And then you think about the vehicle that it's in, and I've been harping on hedge funds, and just a fun little story on hedge funds. When I was at CalPERS, we actually fired all of our hedge funds. And that was a project that I directly worked on with a small group of people. And we were looking into the hedge funds at CalPERS, and there was a bunch of them. And one hedge fund was working on one strategy, the other was another strategy. And when you combine them, you just got this like pot of all these different risk factors that basically kind of blended into like the S&P 500, because all their different risks they were hedging kind of canceled each other out. So it was just, and this is true at like every single pension. And then you're paying a 2% fee and then 20% carry on their returns for basically an S&P like profile. And you're like, why am I paying this fee? And it made zero sense. And so we fired them all. And that's one of the things I'm actually really proud about at my time at CalPERS, because you look at some of these graphs that have been circulating on Bitcoin Twitter the last week, and most hedge funds are underperforming the S&P 500. So you're paying 2 and 20 to underperform the S&P 500. But the Bitcoin treasury company, you get a hedge fund like strategy in an operating company, and you don't pay 2 and 20. You pay a small fee. Like when you actually look at what the fees might be, if you think about it in a fee mindset versus a, well, I shouldn't pay anything. When you compare it to a hedge fund or ETF, it's the cheapest form of a structured investment that I've ever seen. And it's also the best structured investment that I've ever seen. And I just think that mindset, people don't understand that the FT will tell people to go buy a hedge fund, but then they'll talk, they can't understand a Bitcoin treasury company or the structure or the return profile. And And it just shows you, I think what it is it's incentives, because the Financial Times, like where are they going to get their money from selling subscriptions, from talking to all the industry leaders at the hedge funds? Where are, rating agencies and all these different, structural players getting their money from? They get their money from places that charge a lot of fees. And I think what you're seeing with Bitcoin Treasury companies is a move towards a better model for investors to make better total returns over the long run.
With Bitcoin as the hurdle rate.
Yes, with Bitcoin as a hurdle rate. Exactly.
There's also going to be the impact over the long term here, and probably over the midterm, where you look at the aging cohort of people that are coming out of the workforce that are entering retirement. And what I think a lot of people are still missing when it comes to the digital credit products that are getting released out to the market is when you go and think through like a traditional retirement planning model, and people start to go, risk off, and they now need to protect the base, and they need to be able to generate enough income off of that base to be able to live. And you've got the models out there where you can have a 4% draw or a 5% draw, and they're going to target, averaging a 6% return in the portfolio using different fixed income instruments. When you start to understand that debasement trade and you look at the structure of these products have a really powerful impact to average up that overall return, even without having full exposure in the Bitcoin ecosystem. And I think people overlook just how impactful it would be for a lot of retirees, particularly because the cost of living has gone up so much that they need more, they didn't generate a big enough base, where these products actually provide the ability to average up that fixed income return that they're targeting into that portfolio. And if you average up 0.5% or 1%, that's a massive impact to how long that capital is going to last for you in retirement. And so I think as these products start to scale and as they start to get more coverage from, the analysts that the RIAs trust or that the financial advisors trust and they're comfortable with, I think you'll start to see these products working their way into these blended retirement portfolios as well to help try to average up that yield that they're obtaining out of that portfolio, which lowers the amount of capital that's actually required for people to have a successful retirement. And that's a massive opportunity right now. We've seen how many of these brokerages and RIAs are not able to even discuss Bitcoin with their clients still, even today. And we're starting to see that turn. And I think that now that there's products out there that are liquid, that are providing good yields or good dividends, I think that this is going to become one of those areas that's too good for them not to look at. And that's going to start to draw more and more capital into this ecosystem over probably the next 5 years. Because it's like they always say with Bitcoin, right? People are going to find Bitcoin when they need it. Well, I think people are going to find these fixed income products when they need it too. And we're about to have a massive wave of people exiting the workforce that are absolutely going to need it.
I wonder how many people at Vanguard are just, going crazy because they can't access any of these Bitcoin instruments. And I pulled up this chart, maybe we could share it, which I think is worth taking a look at. It's the fastest ETFs to hit 100 billion. And the prior fastest ETF to hit 100 billion was VOO, which I'm pretty sure is an Vanguard S&P 500 ETF. And here's the screen. We'll share it here. The IBIT ETF is $2 billion away, 435 days in. Now look at that speed. It's just totally incredible speed for getting to 100 billion. I mean, this is the most successful ETF of all time. And we're like a year and a third into it. Like where does it go 10 years from now? And you start to look at the revenue generated from that particular instrument as well. And I don't see why every single one of the BlackRock sales reps isn't knocking the door everywhere to go sell this thing right now. And you just point to this chart. You're like, this is the most successful ETF of all time. You need to have an allocation to it. And that's an easy sell. It's a really easy sell. So still early days here, super early.
As fiat systems falter, wealth preservation isn't a strategy, it's survival. While the world reacts, Swan Private clients are already prepared. Swan Private builds strong relationships with clients around mutual conviction in Bitcoin's long-term promise. With concierge service, deep expertise, and airtight security, the Swan Private team helps build generational wealth the right way. Swan Private's comprehensive Bitcoin wealth platform serves over 5,000 clients with more than $4.5 billion of Bitcoin purchased to cold storage. Swan Private is built for long-term partnerships. Get started today at swan.com/private. Do you guys want to kind of walk through the CAMP, Corporate Alternative Minimum Tax? Like, what is it? What were the risks associated with it? And what is this most current guidance maybe now clarifying and giving people a different view on it?
Sure. I'll kick it up.
You take it, and I'll put some edges.
Yeah, you go deep, but at the high level, if you think about the last year for Bitcoin and Bitcoin Treasury companies, the biggest risk was regulatory risk and government risk, IRS risk, all these different risks that come for U.S. companies out of DC. And so the first massive risk reduction was the election of President Trump, who became the first president to speak at the Bitcoin conference and moving into, I think a crypto presidency, but one that's extremely friendly to Bitcoin, specifically set a distinctive for a Bitcoin strategic reserve, mandates to the SEC to not, to not constrain Bitcoin and Bitcoin innovation. And we've seen that just as we were completing our reverse merger, working with the SEC was pleasant to do a reverse merger. In the last administration, just doing public equity ETFs, it was a pain in the butt to work with the SEC. And so there was a massive switch change where, so that changed that with the minimum tax. That was another risk, that for a Bitcoin treasury company, that you started to get net income above a certain level, and even without selling any of your Bitcoin, you'd have to cut the IRS a massive check. And it wasn't even about giving Bitcoin preferential treatment versus other assets. It was actually just making it on par with other assets that a treasury might consider holding. And so that's typically most common what Bitcoiners, Bitcoin treasury companies are looking for, is that you treat Bitcoin as on par with other assets. And so this clarification, it substantially reduced that risk, and a risk that could have represented a death blow really to Bitcoin treasury companies is, as Bitcoin's going up and to the right, if you have to pay on unrealized gains. And now, there's been even rumblings in the past and prior administrations of bringing unrealized gains, not just to corporations, but to individuals. And that really represented a potential existential risk to Bitcoin itself, even for individual Bitcoiners. And you see us moving towards making that not an issue. Now, my belief is that it needs to even go a step further. And this is how Bitcoin moves from being a store of value to money, is that you need to be able to spend money without realizing a capital gain, even at the individual level. And I think that's where we really need to push DC and continue to educate and push and have it be an alternative currency that people can opt into if that's what they want to do. And I know that obviously probably a lot of people listening to this podcast would want to do that, including myself, but that's how you can win. And to not have a minimum tax from unrealized gains is, I think, a major step that potentially can move down that direction, and even being able to spend Bitcoin in an untaxable manner for individuals and maybe ultimately corporations, but at least being able to hodl and not pay taxes is a massive, massive one.
That no capital gains tax concept, I think, would be short-term bearish, long-term bullish. Because all the people out there that have been holding on to these gains, and they're just like, well, I don't want to take the gain, I'm going to figure out how to, leverage against it, and then instantly get a 30% bump. I think that could be short-term bearish, long-term incredibly bullish. But I think you hit the nail on the head. The CAMT was an Inflation Reduction Act, Biden-era tax policy to bring more revenue in the door for companies that made over $1 billion in net income. And with the change in FASB fair value accounting, where Strategy can mark to market their unrealized gains as net income, that started to pose a potential concern for the 2026 tax year. So the guidance is actually really helpful and puts them, like Matt said, on par with other assets. Think about insurance companies, for example. Many of them have over $1 billion gains, yet a lot of that is a result of their investment portfolios, and that wasn't subject to this corporate alternative minimum tax. So that's a little bit more clear now. But again, Matt, to your point, there's a lot of work that needs to be done. This needs to be cemented into policy moving forward. So I encourage everybody to, get involved in politics as much as you may hate it. I know many Bitcoiners really hate the politics side of things, but get involved. I mean, this is how we make splashes into the future, both, economically, for your community, for the network, every side of this thing. So yeah, it's a big win, very helpful for the future, but there's a lot more work to be done.
But it's one more area of FUD that comes off the table.
Boom, FUD buster, gone.
And I think that's, important, is that we've got all these things that were meant to slow Bitcoin down, or were going to be the death blow for anyone that was participating in Bitcoin equities. And one by one, all of those FUD narratives are starting to go to the wayside. And I think this is a really big one.
Huge.
And people are probably underestimating just how much fear there was out there about this. And it was founded. I mean, it was founded fear, right? This was a real possibility that was going to result, if you look at Strategy and what they were holding, in billions of dollars in taxes ultimately being owed. So I wouldn't look at this one and say that it was unfounded fear, because you're kind of putting yourself in a position where you've got to rely on logic and reason to succeed in changing these policies for something like unrealized gains on Bitcoin and not being able to tax them. And it's not easy to have confidence always that they're going to do the right thing here. But in this case, it appears that they have, and this is going to take one of the large fear vectors out of the way here for the Treasury companies, which is going to be a massive win.
Yeah, I mean, Strategy? We're 6 days into Q4. I just posted about this. Strategy is sitting on like $6.5 billion of unrealized gains 6 days into Q4. It's like $500,000 per employee per day at the company. It was just staggering statistics. And it feels like the rocket hasn't even left the launch pad yet. You look at Bitcoin gold chart, it's relatively flat over the last 5 days, and still significantly below all-time high just about a month ago. So continuing to watch all those metrics, and I think all systems go here.
Yeah, and I won't be surprised to watch some of the Treasury companies lag Bitcoin's move. I think that because we had such an intense period for, call it, the last 2 months, where conviction got shaken, I think you had a lot of capital rotating into Bitcoin directly. But human nature is ultimately, as soon as Bitcoin moves, what you start doing is you start looking for the things that are that should be high correlation in that ecosystem that haven't moved at all. And I think that capital starts coming back, and then we start to see the premiums, re-enter the Treasury companies, and you're going to start seeing these flywheels really start moving. So I won't be surprised for it to, take a couple of weeks before they start moving if Bitcoin continues its ascent. But we're in the most bullish quarter of Bitcoin in the cycle. And we just started, and October has been on an absolute heater so far. So it's living up to its October name so far. But we're only in week 1 of this quarter, and there's a lot of game left to be played. And what is it? With the average return typically in October, that would put Bitcoin at the end of the month close to 150, right?
Yeah.
So, people are looking at these correlations from prior cycles and starting to derive their thesis, and those theses are typically hyper bullish, and that's going to push people into allocating this direction. In some situations you can kind of get a self-fulfilling prophecy there. So we'll see what happens, but I'm expecting a lot of capital to start rotating into Bitcoin, particularly now that it started to move and break into new all-time highs, because eventually you're going to be worried that you're going to be left behind here and you're going to miss the entire major bull part of this cycle.
STRC's hit its peg at $99, 99 to 101. So now they are technically open to ATMing it. So it'll be interesting to see if any capital comes in the door on that side. At a Bitcoin price of $150,000, I think Strategy would have the second largest corporate treasury in the world. That is going to make headlines. That's going to make the news. And people have never even heard of this company. You're like, what do you mean it's the second largest corporate treasury in the world? It's like, yeah, it's a company that has 1,500 people and a team of 20 people on their treasury team. And they went from $250 million 5 years ago, and now they have $100 billion. Like that is that's a huge piece of news. And when the rest of the world eventually wakes up to that, it's like, which one of these, treasury companies do you want to own? Pretty hard to say, like, not the biggest one. It's like, I'm, the one that has the second largest corporate treasury in the world. Yeah, I mean, there's a lot of waking up to do on the horizon.
There's also a lot of opportunities for differentiation as well.
Totally true.
I think that's
100%.
What's going to be huge here. There's a massive benefit to the companies that are not first, because what you get the opportunity to do is take the time to analyze the entire journey of the pioneer and the way they did it. And you get to take those lessons learned, and you effectively get to teleport yourself years into the process, and you get to start from the current endpoint of the original strategy. You get to see what were the struggles that they had with each of the different types of products that they released. What did the market react poorly to? How could this be structured differently? And you get to take those lessons learned and make this strategy your own. And when you start with a really clean capital structure, it's a massive advantage, because now you've got full flexibility to grow this the most accretive way you can possibly construct for yourself. And I think that's going to be what's really cool about seeing all these new companies and new teams entering this landscape. Is you've got 5 years now of learnings from Strategy, which they've been very open with sharing. They've highlighted some of the things that they would have done different. They offer their time talking to people to educate them on how they would approach it. And that's going to give all these companies and all these unique jurisdictions their own approach to making this strategy work and to capitalize on their unique setup and situation. So I'm expecting Q4 to be absolutely electric here.
We're going higher, Jeff. We're going higher. T. Boone Pickens wrote a book called "The First Billion is the Hardest." I have a sneaking suspicion that Strategy and several other Bitcoin treasury companies are writing the book called "The First Trillion is the Hardest." So it's exciting times, and appreciate everybody watching, listening, and we'll be back next week with another edition of The Hurdle Rate.